What's up, guys? Bill here. Wanted to do a quick QQQ review on a trade I took today live in my room on voice. I got a couple questions on Twitter asking about the price action this morning and the way we kind of sold off quickly in the first 15 minutes and then had an aggressive move back up. There was some confusion about that. So I want to try to explain it to the best of my ability using QQQ. There's going to be three levels we're going to need to focus on the most here. This first two are dark pools. This one is a bearish dark pool. I call it a bearish dark pool because it was placed on Friday after the before the close, and we ended up closing below it. This level is they're gonna want to protect this level and keep price from getting back above it. So I had this as a pivot for potentially a short trade to the short side today if we had pushed up into that area first. My next pivot was this daily level here. It is the low of day from September 27th. And you can see that we hammered off this level and we were above it for a long time and had never come back and retested it. So to me, this was a very key pivotal level. Those were my two pivots. When price opened today, I told myself I wanted to either long here or short here, whatever they gave me first. And if price respected it and looked good around that level, that was my plan. The third level of interest is this, it's basically in the middle, this other dark pool that was a bullish dark pool that was placed back at the end of September. And as you can see, led to a nice move up, held a retest, and another big leg up. So, one thing to keep in mind, guys, if you're going to trade the indexes, SPY, Qs, you need to really keep an eye on both of them. Keep them updated on your charts every day. It doesn't even hurt to watch IWM as well, because there's going to be times where the overall market moves because of one of these indexes' key levels, right? So sometimes Qs has a big pivotal daily level like this on its chart, but SPY's kind of in the middle of two levels. And if you're just watching SPY, you might say, wow, where did that move come from? And it was because of the Qs, or vice versa. It can happen both ways, all right? So today I had my eyes on the Qs because I thought this was the best risk-to-reward setup with the most likely chance of playing out, guys. So let's go down into the smaller time frames here and watch price in the open. Let's actually look at pre-market too, okay? So here was my main two pivots again, right? The bearish dark pool, the daily pivot. Look what happens in pre-market. Fade to the daily pivot, bounce. These Weeble candles are dark pool prints. This is just more dark pool. They're adding to that, right? These big spazzy wicks. Weeble is great at noticing these orders and printing them on weird looking wicks. A lot of people just ignore, but they're very important. All right. And this just gave me, when I woke up, even more conviction, like, okay, Qs is going to be my top focus. Either we're going to pump off the open, come up here, and I'm going to look to short if price looks weak up here, or we're going to dump and I'm going to look to long, on the pullback to this level and the sweep below it. So obviously what happened is we got the sweep, right? And also notice that at this dark pool, they sell this down. And this is just my theory, in my opinion. What happened here is these bulls, they're protecting this level. We saw that on the daily chart, right? I think that big money sold this off the open to grab this extra liquidity, to sweep these lows on the daily, this major pivot, so that they were sure they had enough juice to eventually go up and take out the bearish dark pool here at 355.60. And look, that's right where we went. And then we started to consolidate under it, and there was a little bit of a fight, and then eventually, boom, we popped through that, okay? And ended up going all the way up to 360 almost, and filling this daily FVG, right? Here's your low from Thursday, created on this high volume, no wick candle down. And look where price ends up going to, and then, you know, a little reject there. We're still got a couple hours left in the day. I'm making this video midday. But these things, you know, more often than not, guys, they're not coincidences. They're not accidents. Okay. So this was my thought process. We're sweeping these lows after people that are trying to protect this bullish position are selling off to get that liquidity, and also at the same time goading in overeager bears who are trying to short the whole, who are trying to go short at support, which we know is not great, right? For every one time you're able to go long at resistance and get that crazy pop, or go short at support and get that crazy sell-off, there's 10 other times you just get clapped, right? And you get stopped out and you're beating your head against a wall over and over and over. And if you're going to trade like that, you better make damn sure that the one time you're right, you're making several 100% to make up for the other 5 or 6 times you're taking those 25% hits. You're thinking you're being, tight with your risk. You're managing your risk. You're stopping out early. Sure you are, but what's your win rate, right? So you better make sure that if you're going to trade like that, you make a ton of money when you're right, and you lose very little on all the times you're wrong. But that was basically it on Qs, guys. And after this, after this move, you're up 80%. And you just let the runners work. They went well over 300%. Then you go back to my, old friend, the opening range breakout. If you weren't prepared, to take calls here, then you could have got in here, right? First close over. I like to use the 10-minute. There's your 10-minute close. Yeah, a little bit of a scary wick down there. But it holds, right? There's your opening range breakout entry. And speaking of that wick down, this is protection. We go back to this dark pool level again, right? The one that the bulls are trying to protect. So they sell off here, grab enough liquidity that they have confidence they can come up here and take these bears out at this level. Look what happens on this retest. Once they get back to over their original position, look at all that volume that comes in to once again come back, retest it. Is this level really going to hold? Big money players want to be extremely confident that their position is the right one and it's going to work. They don't flippantly enter things and just assume that, because 1 or 2 candles went in their favor, that now the sky's the limit and they're going to, hit some huge home run. They test and retest and test again, right? And that's what this candle is. Very important. So, hopefully that helps, guys, on that trade. And if you have any questions, as always, you can reach out to me on Twitter or leave a comment on YouTube or whatever, and I'll help you out. Okay.